Tesla just got done producing its 1 millionth vehicle and now says they want to build a Gigafactory in Nashville. We'll find out how much truth there is to that. Also, Robinhood maxed out their credit cards, so to speak. We'll find out why and get my thoughts on that as well. And finally, is the stock market we're experiencing now even comparable to what happened in the recession, the Great Recession of 2008? You'll get my facts and my opinions on that and more, all coming up. Yes, guys, so another news-filled video here for you as it relates to the stock market. We're going to be talking about Tesla, Robinhood, and if the current market we're in right now even compares to what happened in 2008. But first, I want to welcome you to this channel. Hi, my name is Brad, and this is Own the Chaos. The stock market is a crazy and chaotic place, no more evident than it is now, and I've made it my mission to help you own it. So if you want to see more content such as this, please make sure you're hitting subscribe, hit that notification bell, and if you like today's video, I certainly would appreciate that good old thumbs up. Okay, so on to today's topic about Tesla. They just got done producing their 1 millionth vehicle, and days later, Elon comes out on Tuesday night announcing via Twitter that they are scouting locations to build a new Gigafactory in central USA. The first Model Ys are being built currently in Fremont, California. First Model Ys that have been put in production are being built in Fremont, California, and also over in Shanghai, China. And ultimately, this is all that Elon gave us via Twitter, but sources are saying that they are in serious talks with Nashville, Tennessee. And this seems to be the consensus from all sources, from all other news sources as well, that they seem to be on the very short list. Now, just a couple of months ago, there were some rumors flying around of potentially Texas being a new home for a Gigafactory, but it looks as if things have shifted now to Nashville. And in my opinion, it makes a lot of sense for Tennessee to be the new home for a Gigafactory. After all, Volkswagen is spending $800 million to expand its Chattanooga location, setting a timeline to start EV production there by 2022. And Nissan has already been building Leafs there since 2013 in Smyrna, Tennessee as well. So this makes a lot of sense for them to be looking at that area, as it already seems to be a pretty good hub for the EV market. Not only that, but I think it's very smart for the company as a whole to be looking at in central United States for a potential Gigafactory. The reason for that being, I think, in my opinion, is that you have a lot of people that really haven't gotten on board with the EV market. Most people in that region seem to think that it's just a West Coast thing, especially with the Cybertruck being so outside of the box. And this is primarily where the Cybertruck is going to be produced, is in this new Gigafactory. I think it's a really smart move on their part to kind of give more exposure to people in those areas to perhaps get them to buy into the electric vehicle market. So to further give my opinion on this, I think this is still another great opportunity for you to get in on Tesla, especially with the amount of market volatility we're experiencing and the fact that it's come down from nearly $1,000 all the way down to the $600 range. I still think, in my opinion, that Tesla is on the cheap. So if you're looking to invest in Tesla, right now is definitely a time that you may want to consider to continue to scale yourself in. Now, some people will make the argument that quarter one's probably going to be a rough quarter for them, and I would agree with that. I would say that the issues that surrounding around the beer bug issue that we're having right now will definitely impact their quarter one numbers. But nevertheless, Tesla is moving at lightning speed here, with them getting the Shanghai Gigafactory up in China in a year's time, and they're already starting on the factory over in Berlin. It only shows me that they are still just blowing up as a company, and I think that this $600 range is going to be laughable within the next 6 months to a year, even 3 years down the road. So there's my thoughts and opinion on Tesla. I certainly would love to hear from you, so leave me some comments down below as I respond to every single one of the comments, and I want to get your opinions on this as well. Do you think that Tesla's going in the right direction, or do you think that there's going to be lower prices to be had and you're going to hold off on buying Tesla anytime soon? All right, so moving on to Robinhood. I've said it once, I said it twice and I'll say it again. It's a trash company. And yet again, they have proven it to be true. And just to further prove my point, Robinhood reportedly recently maxed out its $200 million line of credit. The company, who has about 10 million users, has been under a lot of scrutiny over the last couple of weeks, especially because of the amount of outages they've been having. And most recently, this past Monday, if you guys recall, if any of you that out there are Robinhood users, I certainly would love to hear from you. Bloomberg reported that users were experiencing up to 17 hours of downtime from Robinhood. So that meant that you could not sell out of your stock, or you could not even buy any stocks. And so if you guys recall what happened on Monday, the stock market was halted completely for 15 minutes, came down 2,000 points. So even if you wanted to sell and get out while this was all going down, you could not. So yet again, another example of why Robinhood has just been completely falling apart. And this is just a small example of how they've been crashing over the last couple of weeks. Monday was just another example of just terrible timing and how this has all been impacted. I think, in my opinion, that they've just been experiencing an influx of volume, and their systems just really couldn't handle that. When Robinhood was asked about this, though, they still haven't really given a clear answer as to why this continues to crash. But if you follow the line of succession as to when these issues did happen or occur, it was when there was some extreme market volatility happening. The last time it happened, they claimed that it was because of the leap year issue. So, I mean, there's just a lot of oversights that are going on here at Robinhood. And with their 10 million users, I can't imagine that they're going to be having 10 million for long. Meanwhile, while Robinhood was taking out $200 million and maxing out their credit lines, they did come out and say that it had nothing to do with the outages. Capital was returned in full last week, but it's still puzzling as to why they took it out in the first place. If everything is fine, then why take out $200 million just to pay it all back? Bloomberg intelligence analyst David Ritter argued companies don't tap their credit unless they need to, and I agree. I mean, why would you need $200 million if you didn't need it? And I don't know. None of it makes any sense. The only thing that I can really deduce from here is that maybe they took it out in some sort of, reaction to fear of maybe they're going to need this to pay, more coders or what have you to bolster their servers so that they don't crash again. And then they realize that, maybe they figured it all out and then just put the money back. That's the only thing that I can really kind of deduce as to why they would do something like this. But it's still very unclear. If they're going to tell everybody that their balance sheets are fine and that they didn't need the money, then why take out $200 million? Not only that, they took out $200 million, but then they maxed it out. So essentially like maxing out your credit card. It doesn't make a whole lot of sense. And there's a lot of people scratching their heads over this decision, including myself. But ultimately, I want to hear from you again, as it relates to this issue. What is it about Robinhood that you guys love so much? If you're still passionate about this company, or are you frustrated enough to a point to where you're ready to jump ship? I really want to hear from you on this, and also about this, maxing out their credit line. Why would they do something like this? I certainly would love to hear from you guys down in the comments below. I want to hit there we go. So on to the final topic of today, and it is this. Is the stock market even comparable to what happened in the Great Recession of 2008? After all, it kind of feels like that a little bit, right? The stock market's plunging. People are throwing around the R word. Federal interest rates are being slashed. And then there's also government stimulus packages being proposed. So it's only natural to assume that maybe this is some sort of repeat, right? Well, in my opinion, I would say no. After all, I did live through 2008, and it was much different then than it is now. I think that it's important that we all take a step back and chill a little bit, because right now everybody's just assuming that 2008 is right around the corner, and there really isn't any guarantee that the impact of the beer bug is going to really have a similar impact. And in my opinion, I don't think it's even close. And here's why. The 2008 financial crisis resulted in years of deeply rooted spots in the economy. Clearly not what's going on here. Before the virus, showed up, the economy was doing extremely well. There was not any kind of fundamental issues going on with subprime mortgages and lending money out to people who really couldn't afford it. And there was no, job cuts. We entered into the stock market crash here with the economy doing extremely well. Employment is down at near all-time lows. And what we're seeing here is more closely related to what we would compare to like a natural disaster or of some sort. And so I think that the bounce back that we have from this is going to be much faster than that of what happened in 2008. Now, I'm not saying that there's going to be any kind of crazy bounce up, or that, all of a sudden things are going to be better within a week's time. This is going to be a gradual move, but I think it's going to be much faster than what happened in 2008, because because there's not people losing, millions of people back in 2008 lost their homes because they were given loans that, banks were irresponsibly handing out. People were buying $400,000 and $500,000 homes on a $50,000 salary. Things like that were actually happening, and that's not what we're experiencing right now. People still have their jobs, people are still getting paid well, and people have been saving money, which means that they have cash to spend. And so if they have cash to spend, more than likely they'll be buying more stocks, investing more, and taking advantage of a lot of things that have now come down in price. Having said that, if you do have cash lying around, I wouldn't take all of the cash you have and start buying things up, but I definitely think it's a good idea to start scaling yourself in on investments and buy things as they start to come down. Nobody's going to be able to predict the absolute bottom of the stock market, so it's always important to scale yourself in and not just take all of your money and buying everything up all at once. I think it's definitely important to just buy in chunks at a time as the stock market starts to come down, and then, as it starts to go up, maybe then you could even scale in that way as well and ride up into the momentum that will inevitably happen, in my opinion. So I just wanted to cover this because there's a lot of people that came up to me and were asking me questions about this. Is this even close, or is this comparable to what happened in 2008? Should we be worried? And in my opinion, I say no. I do think that it's probably going to get a little bit worse before it gets better, but I think that we're getting close to a bottom here. I don't imagine that we see a significant drop of any kind moving forward unless something else crazy happens. But if nothing else happens and people start to move on from the virus here, and then also the oil issues that have been going on here recently this week, I think that the market will tend to start to move back up in the right direction, and which in my opinion will lend you guys really good opportunities to capitalize on this crazy dip. So that's going to do it for me, guys. I want to hear from you on this topic as well. So if you could leave some comments down below, what do you think? Do you think that we're headed for lower lows? Do you think that this is eventually going to start turning around relatively sooner rather than later? I definitely want to hear from you. I respond to every single one of the comments, so I want to hear from you. Engage in conversation with me. I certainly would appreciate it. If you got some value out of this and you want to learn more and you want to learn how to invest and even day trade in the stock market, I encourage you to check out the links down in the description below. I have a mentorship where I go live with folks every single day of the week, and I'm with them throughout the entire trading day as well. So if you want to go check that out, the links are down in the description below. It's over at WeTradeHQ.com, and I would certainly appreciate it. Would love to see you there. And that is going to do it for me, guys. If you like this video, I certainly would appreciate a thumbs up. And if you have not subscribed yet, what are you waiting for? Hit that subscribe button and hit that notification to get alerted every time I put up a video. And that is it for me, guys. Thank you so much for tuning in. As always, I will see you all before the bell, and B Smith is out. So did Elon really lie to us, or was it just a matter of the situation that occurred after those earnings reports came out? Well, if you look at when Elon made that announcement that he